One of my very favorite trade setups is to use what we call the Long Condor. Hi, I'm Larry Gaines, Power Cycle Trading, and in this video I'll show you a way to incorporate a Long Condor option strategy into your directional trading. So what we have here is Costco, and we've got, just from a technical directional trade standpoint, momentum, you can see down below my cycle 1 and 2 momentum indicators down here where my arrow is are below 0, so it's showing negative momentum, so price is pushing down. So momentum is to the downside. Now yesterday we saw that this was starting to break lower, and we were also then looking at a lower time frame. We were watching the 30-minute time frame and decided to take a short-term trade setup based on just, going into expiration Friday and using a short-term time frame for the trade. So let me show you what that setup looks like. So yesterday we were looking at Costco, and it was in a volatility squeeze on the 30-minute, and so it started breaking the trend line. So we went ahead and did a short trade setup by doing a put debit spread, looking for a move. Basically, we were looking for a move down to the 618 retracement at 185, and then it broke through there a lot harder today. So what we're going to look at here is the put debit spread setup, and then you take some profits on the lows down here. Now the next thing you can do is, if you want to stick with the trade for potential bounce back up as it comes into this lower support, you can convert this to what we call a long put condor. Okay, so we'll do that by selling an out of the money bull put credit spread to incorporate or add that to the long put debit spread here. So this is how that setup looked. Okay, so yesterday when it was breaking down through that trend line that I showed you just a second ago, we picked up and set up a March 16th series. This is for this Friday's expiration, and bought the 187.5, 185 vertical put debit spread, $2.50 wide, set that up for 85 cents. You can see it's currently at 186, so it's up over $100. So you want to take some profits here because we did hit our profit target, went right through that 85 and down on the lows. So you take some profits here, but then if you want to stick with this trade looking for potential for a hold on this support and then maybe a snapback back up and a retracement into these moving averages, the next step is to sell a bull put credit spread to offset or blend in to the put debit spread. So based on that, if you came in and did that right now, that spread is going at 45 cents. So you'd sell a bull put credit spread, the 182.5, 180, bringing in that credit of, in this situation, $46 right now. And now you've reduced your downside risk. You've got downside risk to $39, upside risk $39. But here's where you have the big profit zone between these strikes, basically the 186 and 181. So you've got a really big profit zone. And what it really does is it pays off as you go into expiration, and it's between these levels here. Theoretically, you've got potential for this trade to make $210 on a risk of 40. All right, so currently you take some profits, and then you add this if you want to stick with the trade longer, looking for a potential bounce or retracement snapback towards those moving averages. So we've just converted what we call a call, not a call, but a put debit spread, added a vertical bull put credit spread, and created what we call a put condor.